The midpoint of the trading week did not bring any significant news to the US stock market, but was not disappointing either. The major stock indexes keep displaying moderate optimism. Federal Reserve Chair Jerome Powell's speech on Wednesday left the market in uncertainty regarding the future interest rate decisions. As a result, the S&P 500 and the Nasdaq managed to maintain minor gains, while the Dow Jones ended its winning streak. Analysts at the InstaForex are ready to share their market insights with you. Meet our fresh video review of the US stock market. The benchmark S&P 500 index closed the session with a moderate increase. The index was trading in line with our forecasts, remaining within the predicted range and closing just 4 points higher, or 0.1%, at 4,382 points. Thursday's pre-market saw the major indexes more upbeat, with the futures inching up between 0.05 and 0.2%. As for the S&P 500's trading forecast, our baseline scenario sees it moving within the range of 4,360 to 4,410 points, with an optimistic outlook suggesting a rise to 4,428. Wall Street's movements fully reflect the uncertainty following earlier comments by Federal Reserve officials this week, after the regulator kept rates steady and signaled a potential end to the tightening cycle. Comments from several central bank representatives left room for additional hikes. Powell's much-awaited speech on Wednesday failed to clarify the Fed's monetary policy stance, leaving market confusion hanging in the air. The corporate earnings season has also come to a close, with a notable event being Warner Bros. Discovery's profit announcement. The media and entertainment conglomerate's stock plunged by 19% after it warned that Hollywood strikes and a weak advertising market could hurt the revenues in 2024. By the closing bell on Thursday, index futures continued to trade positively, albeit with an unstable sentiment. The indexes are struggling to find a direction, once again with the hopes pinned on Powell's upcoming speech. The Federal Reserve Chairman is expected to speak at the International Monetary Fund conference, and later today, Richmond Fed President Thomas Barkin is also slated to discuss the outlook for the U.S. economy. Chicago Fed President Charles Evans commented that the U.S. Central Bank needs to carefully consider the impact of a high long-term bond yields to ensure they do not slow the economy more than expected next year. Signs of a weakening labor market and the Fed's dovish turn at its last meeting have led to a drop in the US Treasury yields from multi-year highs, aiding a stellar stock comeback from the October lows. A decline in energy prices has improved the inflation outlook and helped reduce the yield on the 10-year Treasury bonds to the lowest level since September 26, and they fluctuated just above 4.5% earlier Thursday morning, despite the mixed reaction to the new 10-year notes sold at yesterday's auction. Most traders are betting that the Federal Reserve will leave interest rates unchanged this year, with the probability of a decrease of at least 25 basis points in May standing at nearly 47%, according to the FedWatch tool. Investors also digested the latest report from the US Labor Department. The number of initial jobless claims in the United States dropped to 217,000 for the week, down from 220,000 in the previous week, surpassing market expectations of 215,000 claims. In the currency market, the US dollar index spent most of the day strengthening, but after the release of the Labor Department data, the US currency loosened its grip and slowed down its growth. As a result, by the opening of the US trading session, the index was 0.02% lower, trading at 105.60. The US dollar index is expected to move within the range of 105.40 and 105.87. If Powell again signals a possible end to the Fed's tightening cycle, the index may return to 105.20 and 105.00. On Thursday, the US dollar surged against most currencies as markets braced for remarks from Fed Chairman Jerome Powell to see if he could push back against the rally in the US Treasuries that has pushed yields lower. At the same time, the US currency's optimism stumbled on a jobless claims data, which fell less than the market expected. However, the head of the Federal Reserve still has a chance to help the national currency to rise above the level of 105.80 today. However, he may also weaken the currency. As for the Canadian dollar, it's trading relatively stable near 1.3825 today, and the dollar-loonie pair is projected to trade within the range of 1.3750 and 1.3830. The Canadian dollar attempted to recoup some of its losses today after 3 days of declines. The currency remains under pressure from oil prices and the US dollar, despite the news on Wednesday that some Bank of Canada policymakers see the need for further interest rate hikes. Some members felt that it was more likely than not that the policy rate would need to increase further to return inflation to target the minutes rate. Others policymakers considered a scenario in which an interest rate of 5% would be sufficient to bring inflation back to the 2% target, provided it was maintained at that level for a long period. As for the cryptocurrency market, it's on the rise today due to speculation surrounding the spot Bitcoin ETF. As a result, Bitcoin is approaching 37,000, gaining nearly 4% in the last 24 hours. As for the trading outlook, the base case scenario suggests that the flagship cryptocurrency will trade within the range of $36,500 and $37,400. If bulls consolidate the price near $37,000, the upper boundary of the range could be reached. The worst-case scenario assumes that the BTC price will move to 36,340 points. The big news is that the SEC has begun talks with the Grayscale Investments to sort out the intricacies of the company's request to convert its GBTC Trust product into a spot ETF. There is an 8-day window in which the SEC can approve all 12 spot Bitcoin ETF applicants starting November 9. Analysts believe there is a 90% chance of a spot Bitcoin ETF being approved by January. And with that, we wrap up our daily market overview. If you have any questions or want to share your view with us, feel free to write a comment. We are always open to feedback. Don't forget to subscribe and turn on the notifications to always be aware of the latest trends and changes in the market. So, see you online soon.